Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We're doing something a little different this week. We are recording on Friday evening, the 23rd. My name is Ben Maldonado, and as always, I'm here with my partner, Barrie Hederachi. How are we doing, Barrie?
I'm doing pretty well.
Surprised you have any energy this after the week we had. It was a great
Yeah,
week. Yeah, I
yeah,
mean,
that was part of the laugh, but yeah, let's get it done.
yeah, no,
So
we
we can
want
rest over the weekend for next week, right? For
right,
next week.
prepare for what's coming. Yes, very interesting week. Interesting show. We talked about what we're going to do. Barry, of course, is going to cover the big 5+1 now, which is he's going to cover the S&P with ES. He's going to cover crude oil, gold, bonds, the dollar, the euro, and copper. I'm going to be covering in the commodities section wheat, corn, silver. Every week I say there's kind of sometimes there's a message that comes from the charts. Other times there's it's not so clear. And this week in the commodity land, we're getting close. Not quite there, definitely not there on all markets, but on some we're getting close. And the price action, which we'll go over, we'll talk about what we're seeing. First, let's cover Bitcoin. Our little fractal is working out pretty well, isn't it?
So far, so good.
Yeah. And so I don't know if you'd say the scary thing, the interesting thing, or what, but after the spike and then this sort of slide that we saw, in April going into May, then we had the bottom drop out. And we're kind of doing the same thing again, even with all the, the risk off we saw, Thursday, Friday, and basically for the most of the week. Bitcoin was kind of flattish the last 3, 4, 5 days. Nothing major, but if this is any guide, next week might be a hell of a ride lower for it, and we might get a flush. That also fits in with some of the timing. If we look at the fractal, 15 days, 31 days, it gives us a September 27th to October 4th window.
Okay.
So that would be next week and the following week where, maybe we make a load, really get the flush and get down into this box that we're talking about, that 9,000 to 12,000 target range box where, a lot of these ABCs and stuff fell. So if we just were looking at Bitcoin and you could look at no other chart, you'd say, yeah, man, that was a dull week, wasn't it, in the markets?
Yeah, if it was just Bitcoin.
Right. But if you look at this and if history repeats, Bitcoin should have some activity, pretty strong activity.
Dull weeks lead to exciting breakneck kind of weeks.
Right. Chaos follows dullness, no question. Anyway, so that's the story with Bitcoin. Nothing really bullish about the chart. We have our major resistance point up here. Support is going to be here, and we're sitting in between, and we've been in this no man's land for months now. So if the fractal holds, we're going to get a resolution, and the timing should be, sometime in the next couple of weeks. So we'll see. Let me throw it over to you. Let's run through the major markets, and then we'll come back and hit the commodities. Man, somebody pulled the ripcord.
Yeah, and they waited till, well, they actually didn't wait. It started on Monday, didn't it?
Yeah. And then it snapped right through your nice support line there.
Yeah. We left off last week with really primarily just one number. It was 39.40. And the idea was that if we can't get above that, market's weak.
Boy, did that play out.
Yeah, that played out perfectly, right? That was okay. And then on the other side, we had, 28.25 was the support.
25, yep. 38.25.
38.25 was the support. And, we also had this nice channel going up. So the point there was if 38.25 goes, I said we're probably going to test down to 37.80. And if that goes, we're probably going to go test the old lows. And it more or less played out.
Pretty accurate.
Yeah, it more or less played out. The key thing again was that this 39.40 price not being able to take it out, that was a big clue. And after that, you can see, if you look at the shorter time frame, it was all to the downside, clearly. A big change in the character, right? There was really not even a big sort of rips to the upside. Well, other than the Wednesday rip. That
Right,
was,
right.
right, that was expected.
What a head fake.
Mm-hmm.
And look at your
So,
timing too. What a perfect on the 180 on that timing.
well, that's the other thing. We had that. I'm glad you brought that up. We had that. I mean, that was kind of a 90 by 90 by 180, right?
Right.
So we ran up into that, and 4140 was the number up there we were going to watch. Reversed immediately, came down. So when price does that on a good timing cycle, we can expect that to continue. And expect, these are all probabilities, and that's why we try to
Right.
use combine time with price, try to get us into the ballpark so it's practical. And in that case, we were, it would have had to hold above 39.40 in order to make that not work out. So right now we know it did. We even took out the
The ABC,
ABCD
huh?
to the downside, so we can probably delete that and get that out of the way. So, well, 36.19 is sort of where we have to go. That would be the next support level I have. But we did this move down, had its own sort of rhythm, and that 36.19 is pretty much 90 down. That sets up another cycle. But I wanted to also look at, was that the 60? Yeah. So, going into Monday, Tuesday, we'll be 30 days down by 90, 30 by 90, right in, right around 36.19. So that's
It's a decent square.
it's a decent square. So that needs to be watched. I don't have anything in here in that last, whatever the 30 points or so in this spread. I don't really have anything. We're not going to come this close and just walk away. Usually we don't.
Right.
But we could with the false break. So it's possible that we come down Monday and flushes out overnight or Sunday or whatnot, and do some shenanigans. But listen, we always talk about it's at these critical points that we have to really pay attention. It's not every bar. It's only when we come down to really critical levels, like here, it was a 180, right? And when we came down to this level, it was a 135 down. So like that, when it comes to a critical point, we tend to pay attention. And now we're very close to a 90. So that's why we have to pay attention to that. Okay. And so there's always a level to watch to see what happened. And we did take out the 1/8, the last 1/8. So we went beyond 7/8. So in my book, that almost made the 90, but not quite. So there's room for that to be done. Anyway, for now we're going to be looking at our old support levels to be resistance. So for next week, this 37.80 and 38.25 are the two key levels to watch. And if the market sort of stalls out and turns it down, we're probably going to go lower. So, lower is the way. And this 37.80 and 38.25 are the two levels we're watching. Now, somehow, if we get on top of this 37.80, 38.25 area, let's just say we're kind of holding up here, maybe under the line, but holding up here, that would tell us we're ready for, some kind of a little bit of a counter trend. Like here we had, 4 or 5 days up. Here we had, 2 days up and outside. So we could have a little bit of a counter trend. And so we'll watch for that. But the two key levels are going to be our old resistance levels. And if we slip down into 36.19, look, we have a big potential for a false break, meaning, we dip below the June lows and then we reverse. From there, we could have a sort of a blistering move up, sort of a squeeze.
Total squeeze, yeah.
Higher. So we have to watch for that. So those are the two main things to watch. Let's move on to the weekly. So on the weekly, we were watching the square 72. We came untapped it, rallied up to 50%. Came back down in ABCD and pretty much ended, this is, we're one bar off, but this is really 36 by 72. It's kind of squaring out more or less, right? It's good enough close enough for our sort of business. So this box we have to watch. This can't be ignored because it only happens every 36 weeks. So
And it held the 72 as well for now.
it held the 72, and we have, we're pretty much into, so it's usually in a weekly, you can say plus or minus 1 bar, and that's fair enough. And we have that. So because of that, we really have to watch it next week to see how it plays out. As far as support goes, basis weekly, we have this 35.71, let's say 35.72 as the next level of support. We'll see how that works out. Going back to the daily, so we saw that on weekly, we were 72 degrees down, we're 36 weeks out. So the way to kind of ferret this out is to watch resistance. So 37.80 would be the first level to see if we can take out to the upside. All right. You want to add anything to any of that?
Just like we were discussing during the last few days, that it feels like they're setting up some kind of panic, just based on the actions we saw in different markets. And you could get that flush where you were talking about, where you take out the low in a panic move and then rocket back up. I mean, we just have to be aware of these possibilities. We have no, there's no high probability that that's going to happen, but it sure looks weak. And like they, as you said, they don't rarely come down to these lows and just sit there. It's either going to take it out and we start the next leg down, or we're going to get some sort of false break and then another bear market rally type situation.
Right. And I'm glad you brought up this panic because, looking at the cycle work that we do, next couple of 3 weeks, there's a lot of cycles, not just expiring, but also sort of offsetting and combining. So it's kind of a chaotic time period to begin with. And we could, have a lot of, we could have some quick up and down moves too. So you got to really watch that. But you have to watch the corner. So we know what's at these low. And if these numbers get taken out to the upside, we know the pressure should be to the upside from there on up till we, talk again next week.
And well, that's a great point too, Barry, because on Twitter today, I was talking about how, we're getting some clean out moves in commodities that we had talked about on the previous show. And I had some questions like, so we should start buying on the way down. And I said, no, you don't have to buy on the way down. We just wait and then look for the setup where it stops going down and it starts taking out, resistance and sitting on top of it. And then we have the odds in our favor. We don't have to pick the exact low to make money. We just need a setup where the odds are in our favor.
Right.
And so it's the same thing you're talking about here. Until we take out resistance and sit on top of it and turn it into support, the trend is down. And
right.
You don't need to be a hero.
That's right. And one other thing, if you draw this channel, see this down channel coming down, and you can see how we kind of overshot that by quite a bit, actually entire day. And when that happens, normally it also could be sort of a flush and we finish up and then it has to go back and rest, either consolidate or it'll run higher. So that's a possibility. Okay. So we have to watch that, especially combining that with the 72/36 on the weekly basis. So definitely some things to watch next week. The balance would have to be decided on these two numbers. That's basically the takeaway. Right?
It's good. Good work.
And you guys, if you're new to the show, please catch up to where we are, watch the last few shows because we thread everything together over time. So maybe catch up with those. And also we're doing something new this week, and that is we're going to break up all the markets into their own little mini shows and put the entire week into a playlist. That way you guys can just go to the markets that you're interested in. And I think it'll be convenient. So, and Ben and I talked about that for a couple of months, really didn't get into it, but we'll try it this week. And you guys can let us know what you think. If you like the show in one big block or chapters all broken up into different parts, let us know in the comments and that'll be great. Speaking of comments, if you like the show, like our work, please like it, share it, and the alerts. So YouTube will help promote the channel, right, Ben?
That's exactly right.
We should really look into what happens exactly. We don't even know anything about social media, so just kind of bumbling our way through it. We just do
Right.
videos. That's about it. Anyway, all right, let's move on to bonds. All right, so we have bonds here. We're looking at the daily. We left off last week with, well, basically saying, listen, we're week under 132, and if 132 goes, that's going to be resistance, and we have a lot more to go, and probably this 90, which is around 123. And I know we have some support around 125, so 125, 123. We'll get to that when we get to that. But for now, bonds are definitely on the, well, you see the trend is your friend, right? And the trend is clearly down. And 132 is resistance. So watch that level to see if the markets. So when I say watch that level, what we really mean is, if the markets are stalling and turning down below this level or at the level, it's, those are good setups. But if we get on top of that 132 and settle above it, then the downside might be subsiding for now, for the time being.
Hey, Barry, interesting thing on the daily before you switch over. This is a pattern that, we talked about many, many years ago. You rarely see it in markets, but doesn't this look like a slow march here?
Well, it's a little too fast for the slow. It's a fast march.
Yeah.
It looks like that, but it would have to be a little bit slower,
A little more time.
Yeah, a little bit more time.
It almost looks like the flush part of the slow march, doesn't it?
Yeah, it looks like that. Yeah. But basically, it's a very nice and healthy bearish trend, right? Textbook as far as that goes. Kind of like this section here back in February, March 2021, right? And we looked at the long-term charts a few sessions ago, and 270 is down here on basis daily, so that comes down to about 123, and that's that 90 coming from there, so that's the next big level. And let's go on to the weekly. Well, we're down 7 weeks, almost came to the 1/3. So I think 7 weeks is it's a number. We might get a relief week next week and get a little bit of a bounce or consolidation. I think it's time. You got to watch that for sure. And if that's the case, this 132 area, half square, is going to be the resistance. Basis weekly. So these are just for, if you're watching the longer term spots. Other than that, long as we're below 132 basis weekly, we're still fairly bearish.
Weak footing. Yeah.
And now that we took out the 50% of the second square, it definitely opens up down to the 144. That's around 114 or so. So there you go.
And to your point also about, we're down 7 weeks, and it wouldn't be surprised if we bounced and got a green candle. On my monthly, we hit support on a full square at 126.5, so 126.15, so right in there, right near the low.
And the other thing here is, if you look at these lows back in 2013, we did a bit of a false break below that. See that? And we have this, little bit of a support in that same area, false break here. So it's possible we get some kind of a bounce off of that. Also, being that it's 7 weeks down, no matter what, use the daily levels first for resistance, and basis weekly, it'll be 132, 132.5, roughly. So here we go. So yeah, 132, pretty much the same levels.
And that's the key.
Yep. And it looks weak. So that's it for bonds. Here we have crude. And
you stayed inside the circle and you got another fast move today.
Listen, Ben, when you do these circles, you never know what the outcome is going to be.
I know, but this one is fantastic.
And we've had this for a couple of months, right?
Yeah.
And
that's fantastic. I mean, look at this week. It picked up right at the edge of the circle and started a fast move.
Yeah, I was watching that, but wow, it's really going to happen because you really don't know. And because
Right.
83 was holding till today, right?
Yeah. Yep.
So everything kind of um, worked out at the last minute.
It's
And
fascinating. Fascinating how they
yeah,
work.
yep. That worked out really well.
Hmm.
Well, it'll work out really well if you're short. We took out,
Right.
we took out 83, we took out 80, and where oil just looks bearish till we leave the circle now, and support is really between 73 and 75 for now. So that keeps it short and sweet. That's pretty much what we have for next week.
Hmm.
Looking at the weekly crude, we took out the trend line. So this is weak, and we're also looking for support around 75, which is, the next level to watch. Not much more. It's also a nice downtrend. So we'll see how
We're
that
getting
goes.
close. That's what I'd say when I was
Yeah,
looking at
well,
the
I mean,
crude chart. We're close.
yeah, we're getting very close to that. I mean, that could be done in one day.
Sunday night.
Yeah, it could be done very quickly. So there's that.
Yeah.
All right. That's all I have for crude. All right, looking at gold. Look at that, another square showing up.
Hmm.
So this is 144 down from the high, March high. And we came down to square and a half, 108.
Hmm.
And we're also, 45 days down from the high, 45 degrees down from the high in August.
And we completed a weekly ABCD to boot.
And we have an ABCD.
Hmm.
So there's a lot of stuff going on. Now, the key thing for next week is this half square.
Hmm.
Now, I would say, 1646, let's say, right?
Hmm.
I'll put that number in. And long as we can stay above that we can say that squared out, more or less. We could give it Monday, that's exactly the day. But we really need to stay clear of this 1646 if it's going to be a low.
Agreed.
And for some reason, if we slip under that and sort of stall under 1646, then I would say we have a lot more to go. And when we get to the weekly, we'll see where that lot more to go comes from. And in the meantime, we do have a couple of, this channel seems to be having the right slope. So no matter what, I would like it to take these channels out before any kind of long side is considered. But it's good to nail down the low if we can with price and time as it's happening. And we're very close to it.
Sure looked like a clean out move in gold today, didn't it?
Well, the fact that we stopped exactly at the square, 50% and in time, yeah, that looks like a sort of sometimes when things square up perfectly, it'll push or pull right into that time and price, which it did. And so we have to watch that very closely next week. And it's very easy to know because it's basically the Friday low, right?
That's right. And like we talked about, Barry, on previous shows, if you go back and you look at your longer term commodity charts, a lot of times they'll do this move where they do a false break, take out lows, and then it sets the low for the next big move in the opposite direction.
Yes.
Not saying we have, overwhelming evidence yet, but you got to consider that when you're at like this time and price type of relationship.
Well, just remember how many squares we've been seeing so far in these different markets other than crude.
Mm-hmm.
So there, we saw the one in bonds, right? In the weekly.
Yep.
And we have this going on in gold. And there's also one in the dollar. We'll get to that in a minute.
Mm-hmm.
So basically that's it for gold. Let's go on to the weekly. So coming off that 2001 low, up 180 degrees is a key level we've been watching. And so this week we broke under that, and we've been talking about this for the last couple of weeks. And I had that 1750 written up saying, listen, as long as we can't clear that, we're kind of in trouble. And the 1670 was a big support area. We couldn't clear 1750. We tested it a week before. And well, here we are. We came right down into well, potential false break zone.
Right.
And then I put in this 1651 basis weekly. This is a important support level. And we took that out even a little bit. So I'm a little suspicious here. Either we're going to do it here and this is the false break and we're going to get to it next week and turn around, or we have a lot more to go. So we'll have to just sort of play it like that, mainly because it finally reached, it broke through this support it's been holding for, months and months and months. And so here we are. And if, like I said, if the low on gold, because it's squared out, goes, that means this low goes, that means 1651 is gone. And that means
1500's in play, right?
Pardon me?
1500 becomes in play.
Yeah, at least, right? We have a lot more to go. And of course that means, well, we'll see what that means to the dollar, but that's another story. We'll get to that next. I mean, just an ABCD gets us way down past 15, right? And 1420. And so we'll see how that goes. But basically for now, gold is breaking to the short side because we really couldn't hold these other levels, couldn't really stay on top of any level. 1651, yeah, we kind of broke it and kind of managed to stay just above it by 70 cents. So we'll see what happens next week. These are the key levels to watch. It'll be good if we can clear 1651 basis weekly and 1670, of course. And now we have to say there's tremendous amount of overhead, and it would take some kind of a, let's just say, an event to break through, right? But when it does, it'll be powerful, and it'll probably have some momentum behind it. Anything you want to add for gold? No,
I just that we did do that weekly ABCD at the low today, and that gives us a shot, but we have to see.
All right, that's all I have for gold. Moving on to copper. Well, we talked about last week not being able to take out that middle fork. We tried a couple of times and we failed, and the trend is fairly clear that it's to the downside. And it looks like it's going to continue to the downside. 330 is the support I have here. And if that goes, we're probably going to go check out the lows, maybe even lower. Watch that. But now, yeah, it's in a fairly good downtrend.
Yeah, I got weekly support at 338, monthly at 319. So in those areas.
Yeah. And that's up an ABCD here as well.
Yep.
Let's see where that goes. Right in that same.
Right in the support area.
Let's see how that works out. And also, if you guys want to see more time spent on these charts, let us know. We try to sort of save you time and save us time and try to get to the main points and not to take too long. Like we can talk about copper for an hour probably.
Yeah.
But also not to do it in 30 seconds. So if you guys think the time is okay, let us know in the comment section. That'll be good to know, get some feedback. And now let's move on to the weekly copper. Weekly copper is holding on to the uptrend where we were above the 90, but now we're starting to slip. Let's see how it works out. We have 135 weeks from the low coming up, and that would be something important to watch. But now it's weak, like we saw on the daily. Not much to say other than the weekly actually emphasizes that weakness by not being able to hold above the 90. And the uptrend is there long as this channel holds up. But now we're bearish on this. So that's all I have for copper.
There's King Dollar.
Well, there's a dollar, and talk about blow right through our target. We've been bullish as far as probably since 2021. And 112 was one of the major targets we had. We blew right through it, and 113. So for now, I would say this is it's really heating up, I would say, and long as it's above 112, you have to stay on the bullish side until we get some kind of price and time validation of a high, price and time square or something of the sort. And speaking of that, we do have a potential price and time setting up on a daily basis. Now, we also have one on a weekly. We'll look at that in a second. But daily, we have a 72 by 36 by 72 setting up here sometime next week. And price range there is really between 13 and 14, 113 to 114. And looking at the speed of things, looks like we can at least tap it or get very, very close to 113. Not 113, I mean 114. We'll see how we do. And we also have an ABCD that's finishing up right at that level. And that's a nice added nuance to the square. When you have a nice square setting up along with an ABCD, especially when the ABCD, the B and the C are exactly 1/3 of the square. It's I don't know if you can see that, but if you can see the green lines, we can see the B and the C were exactly 1/3.
Sure.
So it's a very tight, nice, really well working well. And a square here would definitely give us pause and to see what happens after that. For now, it looks like we're heading into that. So it's bullish for now, as long as we're about 112. Anything you want to add to that?
Nope, just that it's super strong. And if we can get this right, a lot of the other markets will fall right into line.
Yeah, I agree. Let's take a look at the weekly. And weekly, if you look, we talked about this last week. We have 90 weeks low to high working perfectly. So it's possible we finish that up next week. So we really have to watch this. The time cycle is fairly solid. 90 weeks often comes up to be reliable. So we'll have to watch that.
It's important.
And, we have we talk about the overrun into the next eighth of the square. And that's right at, 113.30. Not too far.
No.
So we have to watch that 113.30. If we can't close above that, or we stall up and we turn around and we get through 112, I would say then we can sort of call that a potential high in place. So we'll have to watch that. Other than that, we're heading right into the 90-week cycle, and that's plus or minus 1 bar. So we'll have to work with that for the next couple of weeks. Anything you want to add to the dollar? Basically, it's all bullish.
112 is the key now, just like 107 was the key for a while. Now it's 112.
That's right, and which is pretty much the 180 degrees up from the low, right? So, 90 by 180. So anything above that is bullish, which could take us even higher. And even if we do square out here, and we get under 112, it would, at this rate, it would just mean a sort of a correction within the bigger bull market, right? Until we get the next lower high, then we can figure out the path.
Yep.
So there's a lot more work to be done, but for now it's all bullish. And that's all I have for the dollar. Moving on to the euro.
There's the euro.
There's a euro, and it's pretty much the mirror. And we joked about this 360 being a perfect place for the euro to sort of finish up this leg. And now it's not even a joke, right? It's possible at some point.
Yeah, it's in the realm of possibilities for sure.
For now, this 95 area, which is 180 degrees down, seems like the next support level. So we'll be watching that to see how that works out. And resistance would be around 99, let's say, which is right around the half square right there. We spent a lot of time above the square, and we did have a minus square out here from the high, but it really couldn't do much, which just points more towards how weak the currency is. And now
they gave it up so easily too.
Yeah, just gave it up. So now it looks like this 95 area is where we're headed to test at a minimum. So we'll see how that works out. And there's also an ABCD working in there. A lot of these big legs finish up with some sort of an ABCD. So I think it's good to watch. We have a 72 degrees down coming into here, but I'm not really sure if that's the one to watch. We'll just watch the numbers that we talked about. And here's the 95 and 72 from there. So 95 is really the next target, let's say. And resistance we already talked about being 99. And let's go on to the weekly. Weekly, just like the dollar, you know, we had that 90-week cycle working itself out. And in this case, we did hit the half square where the dollar, you know, dollar went up to 180 and plus an eighth. So here we basically went to 135. So we have 90 by 135, which is a very powerful square. And so we have to watch that. If we can hold these lows somehow and, you know, and get above, we might test a little bit under, but come back and test. We might be okay, but we'll be watching that because that is a big cycle. And if not, I think if we get past a half, then we have a whole lot more to go, which would be the full square, 180 down. But I think we had time for that. We'll see how it goes. But regardless of what happens, you know, this downtrend is a weekly downtrend of this kind of steepness, this kind of a slope is really very strong. So no matter what, you know, to flip to the other side, we'd have to see this upper channel line being taken out at some point. And, you know, that's going to take some time. So we'll see how that works out.
Sure.
Anything you want to add to this?
Just that it's weak, and it sure looks like that 180 is calling it, doesn't it?
It sure does. I wish it was a 90 by 180. That would have been nice. But this 135 is something to watch, especially since dollar kind of reached a similar square, and we have squares all around, you know, a lot of these other markets. So we'll have to watch all that. All right, that's all I have for me. What I have to share. Let me put it back to you. Cover the commodities.
Excellent. So there's the NQs.
Very close to the ES.
Yeah. Last week, you know, as a part of the story, we were saying while we were below 12.5, we were weak and going to press this full square, and it certainly happened. Early in the week, we kind of held on, and then Wednesday, Thursday, Friday gave it up. We did find support at the half square. By the way, all the different levels for the markets Barrie covers and the markets I cover, not even all the ones I talk about, all the markets we cover, all those levels are on a Google Doc shared spreadsheet, which we'll post the link with the video when we're done editing. So all the levels are there. So right now, you know, the key level for the bulls is they got to hold this 11,280 area. If you lose that, then the pressure's down to the full square down here, you know, at 10.6, 10.7. So the only other thing I wanted to point out, obviously, until we get above that full square there and call it 11,900, the pressure's down. And until we get above that and settle above that, you know, the odds are that, you know, we're going to test this. And if this fails, then we're heading down here. The other thing I want to point out was a little bit of timing. If we do 56 days, it takes us to November 2nd. If we do a 90, it takes us out to December 20th. And those came from sort of different high to low moves that we've seen in the downtrend since the all-time high in late November. So the pressures to the downside, we're losing levels, right? We're losing the half square, we're losing the full square, and until that stops, you know, odds favor we're heading lower. Anything else jump out to you on the NQ chart, Barrie?
Well, that's a good coverage, Ben. I think I'm with you 100%. We'll see how it works out.
Yep. We just got to watch the levels. So on the commodity side, last week, you know, I barely put up any of the commodities because I was saying, you know, the charts were just, and the price action during the week was just saying to me that there was some sort of clean out coming. Like people were just selling and they weren't taking it from one group of commodities and putting it in another, or, you know, going from stocks to bonds to commodity. It was just coming out and going into cash. And so we started to see more of that this week. And in some of the markets like crude and gold today, we saw a lot of that. So most of those markets are in the process of finishing that up, trying to stabilize and establishing sort of a base that we can then say, okay, we got a low, we pushed up, we pulled back, we were holding support, we're capturing a half square, we're capturing a full square, and then we can get involved where the odds are actually in our favor. You know, we don't want to catch a falling knife. We don't want to buy it on the way down. We want to buy it when the setup puts the odds of success in our favor. So that being said, we're going to cover 3 commodities tonight and show you 3 where, you know, the potential setups are beginning. They're further along than something like crude, which just plunged, or gold, which, you know, had a big down today. They're further along in that the setup is starting to evolve where the odds are beginning to tilt our way, as long as something happens and we get the right price action going forward. First one's wheat. So wheat, we had this sort of jagged bottom that, you know, filled in over a couple months where we were having these pushes down, down, down. And then we had a clean out low that then popped right back up and captured a full square. This is when we want to pay attention, right? You get a low, you pull up, you know, get a little bounce up, and then you pull back and make a higher low above a significant spot, like a half square or a full square in this case. So wheat pushed up into resistance, right? We hit the top of the full square, which is normal to have resistance there. Then we had a big down move, 30 plus points today. What we're watching here to see, can we hold this half square? And the half square is in the around 848, 849 area. On this pullback, can we sit on top of that half square and then reverse and give us a place to enter where, you know, odds favor we're going to at least go up here and test, if not push through and, you know, make new swing highs here. So that's the setup in wheat. It's a very bullish setup in my opinion, because while the other commodities have been liquidated, this thing has, you know, moved up nicely and is now setting up potential for another higher low. What are your thoughts on wheat, Barrie?
Well, I'm pretty much on the same page, and I think long as it's about that half square, it's definitely bullish. No, half square, right there, because I have that as support, and there's structural support there also, because that entire, you know, that consolidation is under that. And this high we just had, you know, where you had your full square is 180 degrees down by 90 days from that second high in May. So that is an important point, you know, and the fact that it turned down is normal. The key thing now is, you know, if we can hold above, let's say, your trend line or that half square, and if we can manage to take that out again, I think then we're going to go.
Then it's off to the races. Yep.
Right.
And the next leg higher will have started. So that's wheat. That's one to watch. This one's actually, corn is actually the strongest of the grains, and you can see it in the price action. So we came down, made this low on a full square, right? Another important spot. That was the first trigger. And then look how we got out of here. We had an inside day, and then we gapped up on top of a half square. Bullish sign, right? Came up, failed at the full square. No surprise, right? First test, pullback. Look where the pullback stopped. Half square. What you want to see. Then we go up, we push up again, we get through the full square, sit on top of it, come up, test it again, and then we go again. This is bullish price action, right? Within the square. You can see how the square sort of, it stalls at these places and then it makes a decision. Well, we're at another decision point. We pushed all the way up into this half square, and now for the last couple weeks, last week and a half, we've been doing this little ABC between the half square and the full square. So I'm really curious to see this coming week. You know, do we have to get a little bit weaker? Is there, you know, more liquidation of commodities, more raising of cash because of panic in the markets? And can we come down and hold this half square if we lose that full square? Because if we do, this is still really bullish, right? If we can stay here and turn up, we can sort of catch, give ourselves a chance at catching that next leg up in corn. And this is the most bullish of all the grains right now. So any other insights you have here on the corn chart, Barry?
Well, just that from the July low, we made from that low to the high was, well, that was 36 by 72 on my chart. So that's squared out. And so this kind of and the reaction we've had so far is fairly tight. So which is bullish. But I would, go back to the same as the wheat chart. As long as we're above that half square, I think it's bullish at this point because of all that support is right under it. And looks like we're on the way. And if we take out that high, I think we're not going to be that far from the highs we had earlier this year. If we can clear that, we get there very quick. So,
and you can't say that about many markets right now.
That's right.
So corn is very strong. Last market we're going to talk about is silver. Barry did a terrific job covering gold, and we talked about how gold, was kind of had this clean out move, spike low, potential for a turn because of the squares and where his support and resistance are. Notice that a lot like corn, silver, well, at the same time gold is making new lows, it's basically been going sideways for the last week and a half, right? We had this clean out low here, which not only took out these lows, but if you look back at this full correction for the last couple years, it took out all the lows, the previous correction lows that we had seen in silver. And then we had a nice push up. We captured this level. And now we've been doing this little ABC. If you look at it on a 4-hour or 60-minute, you can see the ABC much better. And a little false break here with here to give us the ABC. So this coming week, I'm going to be very interested to see how silver reacts. Do we hold this full square in the 1888 level? If we can, very, very bullish. Then we know we take out these highs. This next leg here is starting. Much like gold, but sort of further along than gold. I think we had the spike low a month ago in this market, and now we've been sideways correcting in an otherwise environment where things like, copper and gold and other commodities have been getting liquidated. Silver has basically just been going sideways, chopping up and down here. So to me, that's a little red flag saying, hey, notice me, look at me, what's going on here? Why is this market resisting going down? So let's watch silver this week. Let's see the price action. Do we hold the full square here? Do we do a little, trend line break and go down an eighth maybe and push it a little further, yet still give us a higher low? Because again, we're trying to catch that third wave, right? First push up, second is the push down. And then where's that low come into where we can see if we can catch that fast move higher that could be coming in silver. I know you've been all over silver recently, Barry. Where are your thoughts on where we are in this market?
Well, that level that you pointed to is exactly the level we need to watch. That 8, yep, because that's the apex from that triangle in July. And as long as we can hang above that, which is pretty much more or less your trend line, I think silver is holding together fairly well, and it's bullish in that sense. Although we haven't made a higher high yet, so we're waiting for this higher low to come in. And if and when it does, the upside is really clear because that trend line is, you can't argue with that trend line. So we'll see how it works out. So far, it looks good. It's like you said, it's holding up better than gold, better than copper. So,
yeah, that says something. What it is. We'll find out fairly soon, and based on the price action going forward. I mean, that's all I wanted to cover. As I told you, these other markets are in different sort of phases of trying to put in a low. Bigger picture, the commodities were still very bullish. We cover those on the monthlies and give you sort of the 10,000 foot view of why they're still bullish. This week, I'm going to be watching the equity markets, ES and NQs, see what happens, how they deal with different support and resistance levels, because that's the key as to whether we're going to get some sort of bounce, or we're going to rally into resistance and fail, and the next leg down has started. We don't need to guess about it. We just need to watch the levels and watch the price action. So that's where I'm going to be focused, along with wheat and corn and silver at the moment. The ones that are coming into I think lows are like crude. So we're going to be watching there to see how it, do we push down again and get into that 75 to 77 area where we might see some lows. But no need to be a hero in any of these markets. You watch your levels, you see if the price fails or gets through it, and then based on that, the odds favor one thing over another happening, and you position yourself accordingly. How about you, Barry? What are you going to be focused on?
God, it's going to be a busy week, Ben. We'll be watching pretty much everything because everything's at critical points. But mainly the S&P, watching that, gold to see if we're going to break through or if we're going to hold somehow and reverse. Dollar to see if we're going to square out up above. That's really important. Euro to the downside. Bonds are, well, to see where we have resistance. And so pretty much everything's on the plate next week. Not to mention the grains, and not to mention the grains, right? So
right. It's a good thing we're recording on Friday night so we can rest up on Saturday and Sunday. We're gonna need it.
Absolutely.
It's gonna be a busy week. Have a great week, everybody. Barry, have a terrific week. Great show.
Thanks, Ben. Good work. It's gonna be a busy one.
It's gonna be busy.
All right. Bye-bye.